In this episode, we'll be talking about what a Roth IRA is and how to invest in one. Roth IRA, personal investment account. After tax dollars, I'll explain more of this later once we get into it. After tax dollars, tax-free gains. Because this is personal, you have all of the options, right? Whereas with the 401k, or you're limited to whatever your employer decided for that fund. So you can't just like decide to buy Apple because most employers won't allow you to do that. Your limit, I believe right now is 6,000 per year. But the one thing about a Roth IRA is it's for people who make under a certain amount of money. You can't invest in a Roth if you're super rich. There's like an income limit. If you hit that income limit and you go above it, you can never put into a Roth IRA anymore. The other thing you want to know is it's 6K per year, but you can't backdate it or front load it. What that means is if you miss the year already, then you can never go back and just decide, oh, you know what? I want to contribute $6,000 for like 2019. It's too late. The year has already passed. And you can't front load it. So like currently we're in 2023. We can't be like, oh, you know what? I want to put another $6,000 into my Roth for 2024. So it's only in the years you're basically in. So those are the two limitations of it. So generally people will say to invest in a Roth early because that's when you don't hit income limits. When it comes to a Roth, think about it this way. People invest in Roths because they think that they're going to make more money in the future because the gains are tax free. So if I made $2,000 in gains, I just get to keep the $2,000. It doesn't increase my taxable income. But if I do it in a 401k or traditional, I'm taxed even more. My income bracket goes up higher. So like if I made those 2,000 gains, then this gets added to whatever income. Let's just say I make 40,000, and then I get taxed on the higher tax brackets. So that's what people kind of worry about. And so that's why people invest in Roth IRAs over traditional IRAs. These are all for retirement, by the way. So we're moving on to the Roth because traditional is very similar to the 401k. It's just personal and $6,000 limit instead of 19,500. So Roth IRA, basically post-tax dollars. So if we do that 40,000 again, and the tax rate is 9%. So that's how much you got taxed. This is your take home after all taxes. Let's say of this, you contributed 4,000 and it grows to 6,000. You get 2,000 in gains, not taxed. You get to keep the full 2,000, but you had to pay after tax dollars. So that's the only difference. Once again, this is not financial advice. I'm not telling you what to do. I'm just giving you options on the things that people do in general and just to educate you on some of this stuff that they don't teach you in school. Check out the Discord server. I'm still working on it, but I will be posting a budget template in Excel or on Sheets if people need it on that. There is other social media now. I use Twitter, I use TikTok, I use Instagram, I use all of that. So make sure to follow and check those out in the links below and subscribe to the YouTube channel for more content. Thank you so much, guys, for sticking it out with me, and I hope you guys learned something.